Good morning, everybody. It's Friday, July 26th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down 4 at 416 3/4. November soybeans were down 11.5 at 1068, and December Chicago wheat was down 3 at 559.5. This morning we had key inflation data. PCE was out, came back up 2.5% in June, which was in line with estimates. Outside markets viewed that as friendly data. Stocks are currently up about 240. Good morning, guys. No export sales here this morning. We were talking a little bit about before the show here, just on how we went up, tested some moving averages, and from that point have since been a little bit disappointing on the trade side. So, Justin, maybe a few thoughts to kick us off here this morning, and then we'll move it around the room.
Yeah, thanks, Dan. Just we're talking through. Obviously we had a little bit of a, whatever bounce, short cover rally, whatever you want to call it. I think it was met by farmer selling. We got basically to the first, what I would call kind of a key moving average for technical, which is a 25-day moving average. So both corn and beans kind of went up there, kind of tested it for a day or two, failed pretty easily. I think we did run in, like I said, into some decent farmer selling. The weather's just been too good, and we got a little drier, outlook out forward. I think it's going to have to really set in and prove itself at this stage. There's been too many key areas that have gotten too much moisture. Now we're getting to where, ourselves included in our farm and a lot of clients are out looking at their crops and realize how big it is, right? So, and how much grain they have to sell. So that's the calendar is against the market right now. So the hope is you could shake out some, fun shorts and get some kind of a catalyst, but now you're kind of against the clock here. Where harvest is just around the corner, a lot of farmer selling that has to happen, and when you start penciling in much bigger yields, current prices look more attractive than they did 30 days ago with smaller yields, right? It's just kind of the mental part of it too. So I think that's kind of just the situation we are here. So there's nothing yet. We obviously we broke into some business, which is positive, but again, when you have big crops, that's you have to get to prices that you can sell stuff to people, right? So if we prove that these are going to be these really big crops, we'll have buying the whole way down. So it's buying's just it's refreshing to see. But as Ben said before the show, we just started our bean program, right? We're way behind on new crop bean sales, especially for this time of year. So we did get some nice announcements yesterday. We had a nice pop, but at the end of the day, we're still way behind. So we need to stay at prices that continue. We need to see continue week over week demand. I think to kind of stabilize this thing a little bit.
That's good points. Ben, welcome to Oak Brook Terrace here, buddy. Usually we come to you from the east, but what are your thoughts here this morning?
Good to be here. Yeah, you kind of step back, and it's always easy to look at markets in hindsight, right? But when you look at the size of the short, where you had record bean short and near record corn short going into this week, with the forecasts that we had, I think an underperformance would be how I would describe it. Doesn't feel like the managed money feels too nervous about taking a short and over the next 4 or 5 weeks to get to harvest, where they should see some kind of some natural pressure. Until we can find an end user that's worried that might front run them, I think it's probably a sideways to lower unless we see another shift in the weather pattern over the weekend. So we've got multiple runs between now and Sunday night. We've seen it flip 2 or 3 times this week already. The kind of the pattern throughout the year is we get these forecasts that look threatening, and then they all start to moderate, right? They're not as hot, they're not as dry. And this is kind of what turned corn for us there in late June. So, we could be headed into another type of disappointment from a weather pattern not giving this market some fire. And I think the August WASDE, I think that's a big day when we get updated acreage. So,
yeah, definitely. All right, guys.
Yeah, and I just had one point to that too. Is also, Ben, that's a good point. I mean, if you look at the fund short relative to crop size, beans is probably larger. Now, beans, if they have a record yield, beans are probably more burdensome, and we've talked about this for months. Beans could be a super burdensome ending stocks number if we were to approve a 52 or 53 or 4. You're talking 600 or 700 carryout. So it's kind of one of those things where beans are made in August. They could be sitting perfect. If they're betting on perfect weather, they're going to make money on the short. Same thing being said, if we were to turn dry and shut the sprinkler off, so to speak, like obviously bean yields can be affected much more dramatically than corn at this stage. So beans are probably the one that should have the most volatility, and maybe that's Captain Obvious here, but because the extremes of what the carryout could look like based on the next 30 to 40 days of weather is pretty extreme. And in beans, where corn, you're kind of figuring out, the crop's going to be big. How big is it going to be? So.
Well, Justin, it'll be interesting to see too, at the end of the day on commitment of traders too, because we talked a little bit about just a big drawdown in open interest, here in the last couple of days. They covered 16,000 or open interest, was down about 16,000 in the bean complex. So you got to believe that some of that got covered.
Yeah. And there's just, beans have a lot of different hedging and different trading strategies going on between soybeans, meal, oil, crush, right? So there, the bean complex has a lot of inner trading in it. So there's, when you're talking about, renewable biodiesel, and we talk about this a lot on the show, and oil share and crush margins, right? There's a lot of different things that go in the bean complex. So, to see, people getting out of some of these because the moves are so dramatic in some of these relationships. And if you look at overall, volume's been pretty weak in general, and open interest has been weak. So there's just a lack of interest in trading grains as well right now, which can be, super implosive or explosive if some catalyst were to happen here with such a large fund position relative to open interest. It's just we haven't had that, right? So you need that catalyst. It could be something we're not even talking about yet, or something with the elections, or some other thing besides weather. But it's just lack of interest because it's just not exciting right now. So you're not seeing a lot of people are just kind of stepping aside and trying to see how things play out, just for that reason, I think, Dan. So,
yeah, that makes sense. Got a couple minutes here. Rylan, we had monthly livestock slaughter report, showed red meat production fell 6.3% in June. And it seems like, all highlights this morning focus on cash trade. So what do you got for us to put a bow on the week?
Yeah, no, just overall, it's not much of a shock to see red meat production stalling out. We know we've seen packers kind of ease back on the slaughter, and we have less cattle out there. So, overall, I don't think it's that much of a surprise. I think just a lot of the bullish sentiment is really because of that. And that's why we're sitting at near historical highs. We got August nearly up to, back up to the contract highs, and we had a really good close yesterday. So cash rate was kind of all over the map. Kansas saw 187 to 195, like a pretty wide range. So generally the average should be up this week. Texas was posting trade at 190. So coming into this week, I think everybody was kind of a little bit of doom and gloom here, thinking that we were going to see 188 or lower, but we're getting a higher trade. So it seems to be a little bit of a mad dash. The board is really responding. We're narrowing that discount pretty quickly. Beef prices have since kind of stabilized a little bit. We saw Select was up about $1 yesterday, and even though Choice was down 22 cents. So big up in open interest, like 40, almost 5,000 contracts. So I think that we got some new buying here, and it's really making everybody pretty optimistic. I would say after the last cattle on feed report, the tone has kind of changed a little bit going into this next month. So I think that's something to watch. The changes in open interest and overall, it feels like the futures are going to start following cash a little closer now that we're narrowing up the basis a little bit here. On the hog side of the market, just kind of stabilized, a little bit of an inside trade. Open interest was up about 2,500 contracts. So it looked like we're seeing a little bit more new buying here as the market's been kind of showing some pretty good strength, reinforced by the cutout here. So we got this near-term demand. The market wants to see if it's really going to be something that we can hang our hat on, but overall it just feels like it could go away at any second. Kill was down this week. So just overall cash started to finally start to weaken up. So I think we're going to see a little bit of caution here towards the end of the week, but overall all the news has generally been firm and the momentum has been good. So it just looks like on the downside we can test some of those near-term moving averages.
Hey, Ryland, just question for you. Kind of interesting because you look at, some of these statistics on, demand in restaurants and foot traffic, and all those things are down.
Yeah.
And I think anecdotally we talked about it. You can see it here in the the restaurants that used to be packed every night for years and years. Like you can generally get in there and get a table now.
Yeah.
Just with how expensive it is to take a family out or something. So is it kind of interesting to see meat, especially beef at such high prices still? And
yeah.
Is there a reason that you think? Is it just the supply side that's keeping it there, or how's the demand keeping up at such high prices?
Well, I mean, and we've seen like the market really is held up by the grinds and the trimming markets. Ground beef right now, especially just like we're in the middle of grilling season. This is when burger demand and BLTs should really be kind of cooking here, no pun intended. So I mean, like
that was brutal.
Sorry. So,
dad joke.
Yeah, exactly. So demand should be pretty firm here. It's all the big concern really, I think, going into this time frame was how is demand going to hold up? How is it possibly going to hold up? The only way I think we really start to see prices go down here is maybe looking to import, and I think just even Conab came out and said that their beef output is going to hit a record in 2024. So they're going to be up to like 10.19 million metric tons. So I think that's probably going to make it in the ground beef supply. But overall, like it just feels like the packers have been in control. Meanwhile, we've got we're trying to incentivize this profitability to get the market to expand. The question is, are we expanding at these prices? Has weather been conducive? Is feed cheap enough? Are producer margins high enough to retain heifers? And anybody you talk to is going to say, oh, no, it's not happening. And it may not be, but like we've been up here for so high, so long. That's really the incentive now is that do we need to see $2 plus in the back end of the market to get guys to finally say, hey, we need to retain these heifers rather than sell them. Mm-hmm. And, you're kind of caught a little bit in circular thinking when you think about it. Where's the incentive? So it's kind of a wait and see thing. We didn't get the cattle inventory report this year, this July. So we're still kind of operating under the guise that there's been no expansion and it's not going to happen until next year because we're just not retaining the heifers.
Sure. Okay.
Very good. It is Friday. We are going to wrap this up, but not before we go to Brian Williams for some Fun Fact Friday to end the show.
Thanks, Dan. Happy Friday, everybody. Anyone planning on going to a casino anytime in the near future, be careful. You might end up in a drunken bed and your name might get officially changed. Back in 2009, a New Zealand man and his buddy went into a casino, made a bet that loser would have to officially change his name. So after 5 years going through the courts, the government finally approved all 99 characters and has officially changed his name. So you guys ready for this new name?
Yeah, let's go.
All right, ready? Full Metal Havoc, more sexy and intelligent than Spock and all the superheroes combined with Frost Nova.
Wow.
So, yeah. So just a little tip here. Be careful going in before you make any kind of crazy bets. Try to sign that check.
I guess know your friends, huh? Wow.
Yeah.
Okay. Well, that's a good way to wrap it up there, Bri.
Good warning.
I don't know where you found that, man. That's a crazy Google search there. No, it's good stuff. We if you love the show as much as we do, give us a like and subscribe. It's real important to us. It shows everybody that we got a lot of followers there and definitely get access to premium content and things of that nature. So it doesn't cost you anything. So if you got the time, give us a like and subscribe. We appreciate everybody tuning in there. We're just coming into the open this morning. We got D's corn down 4 now at 417 is the last. November soybeans down 13.5 at 1066, and December Chicago wheat down 4 at 558.5. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Hope everybody has a great weekend, and we look forward to talking to you again next week.
Thanks.
Thanks, Dan.